It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
I think there is some overall, frustrations with potentially how the market's been performing over the last, 12 to 24 months. But I also see that there's a lot of savvy buyers in the market at the moment that are seeing opportunities that may not have been there, 12 to 24 months before that.
And that is Bree Prince there in Canberra. We'll get back to that conversation in just a moment as we welcome you back into the Real Estate Breakfast right around Australia 7 days a week. Talking property news and information from the suburb of Coogee in Sydney to the suburb of Southport in the Gold Coast. And we are streaming on multiple platforms, including Spotify. It is a Monday, July the 7th. Now, despite recent market softening, most regional areas across Australia have seen strong profit growth for home sellers over the past 5 years. And haven't some of the areas been absolutely staggering, driven by pandemic-era low interest rates and a surge in sea and tree change moves. Now, Domain reports that in fact only 4 regional councils have managed to miss out on this. But if you have a look at Queensland's Noosa, that has led the pack, with median resale profits rising, get this, by 378 grand, bringing the typical gain in Noosa to $617,000 and change. It is a powerful reminder of how interest rates shape long-term property outcomes. So yeah, if you are listening to us in Noosa this morning, you are doing pretty well. So let's catch up with Bree Prince from Hive Real Estate there in Canberra. And a very good morning to you, Bree. Welcome to the Real Estate Breakfast. If you owned some property in Noosa, you'd be licking your lips, wouldn't you?
Oh, absolutely. Good morning. Noosa would be far warmer than it is in Canberra right now. So there's probably multiple benefits to be up north at the moment.
Yes, well, here we are talking on our Monday morning, chillier conditions where you are. It might heat up tomorrow because the RBA has got this meeting coming up. Which way do you think that might go, Bree? You'll be hoping, obviously, for a cut. What do you think?
Yeah, look, we are hoping for a cut. All the information that we're getting at the moment is suggesting that we will get a rate cut. We really need a rate cut, really around more confidence to come back into the market. I think one thing that we're seeing in Canberra, the rate cuts haven't made a huge change yet, but they are improving confidence levels. And that's really what we need to see. We need to start seeing people getting comfortable, people going, you know what, we're headed in the right direction, so that they start to make plans. They start having those conversations about making a move again.
Yes, because Canberra's market, fair to say, is a steady market and also probably a subdued market. Buyers can expect gradual price appreciation, consistent rent growth in Canberra, and relatively balanced supply-demand dynamics. It remains, I think, a solid low volatility market when you look at some other markets, although it does lack the momentum of faster growing cities. But there, in all of that, probably lies the opportunities for people to look right now at Canberra.
Look, absolutely. We are quite stable. We don't necessarily get the highs of your Sydney and Melbourne markets, but we also don't necessarily get the lows. The last couple of years since the pandemic have been quite interesting here. But what we're finding at the moment is that there is some really good buying opportunity within the market, because some of those markets have come down slightly. So it is slightly subdued at the moment. But it really comes down to what a particular person's strategy is in the market at the moment. If they are looking to sell to buy, then, generally speaking, yes, their property price might be slightly subdued, but they're also going to be buying in a market that's exactly, that's subdued as well. So there's a lot of opportunity for what we're seeing at the moment, upsizing, upgrading, people jumping from certain price points because the top end of the market has come down more in Canberra than some of your entry-level areas at the moment.
Let's have a look at the median house price in Canberra on our Monday morning. It is telling us $980,000, while the median unit price is hovering around that $594,000 mark. The median dwelling price, always good to have a look at that because that is combining both the house and the unit value, which is... it's pretty decent. $855,000 is the median dwelling price. Want to talk to you about the days on market because it has grown a little bit, sitting now at 72 days for you.
We have definitely seen that increase over the last 12 months. So typically your average days on market for Canberra usually float between 40 and 50 across the pandemic market. I mean, it feels like yesterday, but it was 5 years ago now. But you were finding kind of your average days on market was sitting anywhere from about 21 to 30 days. 72 is taking a lot longer to sell property at the moment on average across Canberra.
We are talking to Bree this morning in Canberra. When we come back, we're going to look at the first home buyers because apparently older first time buyers Bree is dealing with. We'll find out about that next.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
So take us a little bit back to 2021. You were, as I understand it, you were priced out of Brisbane. Then I think you made a move to Victoria. No, did you move to Victoria? Am I getting that right?
So in 2021, while this money was invested, we were working again, saving up, and then we still couldn't find anywhere in Brisbane within our price point. We looked at buying in Ipswich. I had a boss at that stage who back in the day bought houses in Byron Bay and West End for only $100,000. And he said, "Have you looked at Ipswich?" And I drove out there the next day because I knew that this man knew what he was talking about.
Yeah, and so then you're having a look around Ipswich and you're going, maybe we can do a couple of property flips. Is that what happened?
Yeah, so at that point in time, I was doing feasibilities and all the deals were stacking up and it looked like there would be tiny profits. It was all we could afford at the time. So we took the risk and bought our first deal out there and made almost 4 times as much profit as we thought we would from our feasibility.
Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify and Amazon. Know your property with us.
It is a Real Estate Monday. Yes, all eyes are going to be on the RBA tomorrow afternoon. Now, if you are not following us, make sure that you do because we'll have that the second that news is released from the RBA. And we'll be catching up with, as always, Anthony Landau. So we'll wait and see whether it's a 25 basis points, whether it's 50 basis points, or is it going to remain unchanged? I think most money for tomorrow is on 25 basis points. We are talking to Bree. Now, let's get to the first home buyers because you were telling me that you're dealing with a lot of these older first home buyers. Tell us about that.
Yeah, look, we are. Not everyone, of course, but we're starting to see an increase of your first home buyers kind of in those late 20s, early kind of 30s, probably a little bit more cashed up than your typical first home buyer, looking to spend, anywhere from kind of 1 to 1.5. I've been working with a couple of first home buyers only in the last couple of weeks that are looking in those mid ones in terms of a first property, which I find, look, that would have been great if I was able to purchase at that price when I was a first home buyer, but we're finding that's quite interesting across Canberra at the moment.
And just coming back to the interest rates and what that's likely to do, presuming that we get a cut tomorrow off the back of the previous two, how much of a stimulus does that affect the market?
We haven't seen a huge change since, the other two rate cuts yet. I suspect, though, we will start to see more people starting to shop around. That will bring confidence. It is going to bring more conversations into the households around, hey, what are we actually able to do now? And should we get into the market before we start to see, potentially that market picking up? Because I think will start to impact. And I think a lot of the conversations we're having at the moment with buyers is when should we get into the market before it becomes unachievable again for them.
You were saying that it's more of a stronger buyer's market, which is natural because the market has softened somewhat. So now is the time to buy. We won't tell you to buy because it'll make us sound like salespeople. We don't want that. It's really interesting with people trying to probably move from one property to the next if they are downsizes, etc. Are people getting frustrated, or are they genuinely finding it a lot easier now to transact?
There's kind of two sides to it, really. I think there is some overall, frustrations with potentially how the market's been performing over the last, 12 to 24 months. But I also see that there's a lot of savvy buyers in the market at the moment that are seeing opportunities that may not have been there, 12 to 24 months before that. I do think there's some fantastic buying opportunity at the moment. You've just got to look at the reason as to why you're looking to do it.
Yeah, and before I let you go, what is the single best piece of advice that somebody gave you about real estate? And this is more from, a person buying a property as opposed from a real estate agent's point of view. Have you got something that somebody told you and you went, gee, that is such a great piece of advice that you can share with our audience this morning?
I think for me personally, I would have got into the property market earlier. I bought my first property when I was 31, which, as a real estate agent, it's probably pretty late. And that's probably one thing that I found, trying to play catch up. What I'm experiencing at the moment is there is a lot of younger buyers, even a lot of the team that we work with that are in their 20s that are looking to buy. So my advice would be get in as soon as you can.
All right, Bree, we'll leave it there. Thank you for giving us a little bit of an update on the Canberra property market. Enjoy the rest of your 2025 and thanks for coming on to the Real Estate Breakfast this morning.
Fantastic. Thank you.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
I'm finding as well, a lot of our developers are really struggling to make numbers work on, the luxury knockdown rebuilds and, houses that can be demolished. So they're starting to actually change the strategy and look at these renovators.
They've allocated $119 million to reduce stamp duty costs for first home buyers. They've allocated $210 million for Key Start.
The capital city market could actually start rising more quickly. And that's basically a function of lower interest rates as well, because higher priced markets tend to have a stronger reaction to changes in interest rates.
When you've got rents increasing at the rate they have been increasing over the last 5 years, and obviously with interest rates coming down, it's just bridging that gap between your rental repayments and your mortgage repayments. So more than ever, we're seeing first home buyers, and especially those who continue to rent, move into buying a home now.
We connect you to the best real estate information across Australia. The Real Estate Podcast.